athletes and entrepreneurs. And if you were just here for that session, tons of lessons. But in particular, a main takeaway for me was the importance of both mental and physical activity for both discipline and your own well-being. My name is Natalie Monbiot, and I'm delighted to be your MC for the rest of this morning. So excited to see when I've been lined up for the Startup University, because I happen to also be launching a startup of my own. So I will be listening very attentively for a couple of different reasons here. So in our next session, entitled Investing 101, Finding the Right VC, our expert panelists take us through the 101 for investing in 2019. Whether you're at seed, Series A, or Series D, they will have invaluable advice to help your startup. They'll explain that sometimes the right VC doesn't always mean the highest offer. Ladies and gentlemen, please welcome, in conversation with Inc. Magazine's Eric Schoenberg, General Partner at Fuel Capital, Leah Busk, Co-founder and CEO of Correlate, Apu Gupta, General Partner at BlueRun Ventures, Cheryl Cheng, and Co-founder and President of Clearbank, Michelle Romano.
You and I are getting close.
You got the coach spot.
Wow.
Right, good morning, everyone. This is a panel about raising money, which every startup founder knows that if it isn't job one, it's at least job 1.5. Getting the money you need is not just much needed validation that your team may crave. It can also be, for a struggling startup, the difference between life and death. Now, today's panel understands this topic from both sides of the table, maybe from all four sides of the table, not just investors, but also entrepreneurs, and not just equity, but also other forms of raising capital. So you are indeed lucky to have before you such a seasoned and diverse panel of experts to shed light on a topic of fundamental importance to everyone in this room. Now, starting at the far side, that's Leah Busk of Fuel Capital, Apu Gupta of Correlate, Cheryl Cheng of BlueRun Ventures, and Michelle Romanoff of Clearbank. And I'm Eric Schoenberg. In spite of the name of my company, I have nothing to do with venture capital. I am the CEO of Fast Company and Inc. magazines. So could we start by a little introduction in case people don't know exactly who you are? Start, Leah?
Happy to start. Excited to be here. So my background is actually as an engineer. I spent 7 years coding and programming at IBM before I founded my own company, TaskRabbit, which I founded back in 2008. I raised about $50 million in venture capital from Bay Area investors. And then I went on to sell the company in 2017 to IKEA, and then made the transition to the investing side. So now I'm a general partner at Fuel Capital, which is an early stage seed fund focused on consumer, B2B SaaS, and some dev tools and infrastructure investing as well. We just launched our third fund, which is a $75 million fund that we're investing out of now. So it's been about 2 years that I've been full-time on the investing side.
Congratulations, Leah. Apu?
Hey, everybody. My name's Apu Gupta. This is my second venture-backed business. The first one I built was what became the second largest pharmacy chain in India. So we raised about $32.5 million for that. And now I run a company called Correlate. And what we do is we help brands use social media to sell more effectively online. We work with about 1,100 brands and retailers, companies like Target and Walmart. And we basically help them use social media and make it shoppable. We've raised about $40 million for this, have about 100 people across 4 offices in the United States and London.
Hi, everyone. My name is Cheryl, and I'm at BlueRun Ventures. So I have both an operating background, but more from Fortune 500. I used to work at Clorox and Procter & Gamble, and then moved over to the venture side, actually on the operating side. So my passion is actually building companies, and working across the portfolio was something that I loved. About 4 years ago, I moved over to the investing side to actually start writing checks to entrepreneurs. And at BlueRun, we focus on Series A primarily, a lot of software, fintech, mobile, and I spend a lot of time in digital health.
Thank you, Cheryl. Michelle?
Hi, I'm Michelle Romano. I've done everything as a founder, from starting a caviar fishery over a decade ago to building an e-commerce website and then an app that I sold to Groupon in the Groupon heyday. And now I'm probably best known for being on the Canadian version of the Shark Tank television series. It's called Dragon's Den here. And started a new company called Clearbank about 5 years ago that's all about allowing entrepreneurs to get access to capital to buy Google and Facebook ads, effectively do lower cost customer acquisition. And so we fund that through a revenue share agreement and don't take any equity. And Clearbank will deploy about $1 billion in capital this year.
Right. Thanks, Michelle. The question that is before the panel is, how do you choose the right VC? And it's a question that at first glance seems to answer itself. The right VC is the person who shows up with money when you need it, or at least gives you the highest valuation. Cheryl, why is that too simplistic an answer to the question?
I think it's simplistic. I actually also think it's just wrong, because what I tell entrepreneurs is my most valued commodity is not my money. It may seem like my money when you're meeting me, but it's actually my time. And so the most important thing, I think, between the entrepreneur VC dyad is the relationship that you can build, especially at the early stage, because there's going to be so many twists and turns. And finding the VC that can not necessarily think exactly like you, but can complement your thinking and be willing to invest their time in helping you build the business, I think is actually more important than the check size or the valuation.
Good. Leah, why don't you take that same question? What's the definition of the right VC?
Yeah, for me, I always tried to find investors that were going to be as passionate about what I was doing as I was. And that's pretty hard to find. But with TaskRabbit, we're such a mission-driven business and a mission-driven brand. So it's important to find those partners around the table that really believed in that mission and believed in that vision as well. And that really served me well over the years.
Good. So to identify that right thinking, empathetic source of capital, how do you investigate your potential sources of capital? What are the right questions to ask, Apu?
Yeah, I mean, so the first thing, speaking as an entrepreneur and looking at many of you who might be kind of like thinking about raising money, I laughed at your kind of remark about like the person who shows up, right, with capital. When you're first getting started, like, honestly, it feels like that's what you want to go do. Like, the first person who's willing to write you a check, this thing is daunting. Raising your first round of capital, it sucks. It's a hard thing to do. This is something that you've like believed in and breathed life into, and you're now telling everybody about it, and so many people are gonna think you're an idiot, frankly, okay? And I tell every single founder I meet, your primary goal is not to figure out the 1,000 reasons why your company's not gonna make it. It's to figure out the 1 or 2 reasons why you can get it there, right? And then just hammer on those things until you find a VC who believes in that, and believes in you, and believes in where you're going. For me, that was the most essential thing of choosing the VCs I had. I did not have like 50 VCs to choose from, so I did not have that liberty. But there was a chemistry between my VCs and I where I could tell they had my back and believed in what I was doing, as crazy as it may have seemed.
All right, thanks, Apu. Michelle, you just raised a Series A. How did you know that was the right source of capital?
Well, we were, again, to add to your point, I think one of the things that's been really helpful, we've raised about $120 million, and I just tell myself that when I go to market, like, my job is to do 150 meetings, and I know that of 150 meetings, there's going to be at least 120 no's, and when you set yourself for that expectation, it hurts a lot less every time you get a rejection email, every time someone says, like, this is the dumbest thing I've ever heard of, every time very, very, very smart people are telling you every reason your idea will not succeed. And so I think, I try and think about it as like, this is a time box period. I have to spend, 6 weeks to 2 months on the road. I'm going to do an enormous amount of meetings, and I'm prepared for what's about to happen. And I think that was really helpful in getting my mind in the right place where I could do that.
Leah, in one of your recent blogs, you used a phrase about how you interact with entrepreneurs, which I thought was memorable. You said you'd like to be in the founder's corner, but not in the founder's kitchen. What do you mean by that?
Yeah, I mean, it's something actually that my partner Chris Howard came up with when he founded the firm, but something that really resonated with me as a founder as I was thinking about what firm I wanted to join. And so to us, that just means like, listen, we're not going to be pinging you every week for updates. We're not going to be all up in your business, micromanaging you. And I've certainly worked with, venture investors that are like that. So I really empathize with the founder from the early days of what they're building. But we also want to just be supportive and be there. We're a quick text or a quick phone call away. And one of the areas we really focus on helping our founders with is from a marketing perspective, and we can talk a little bit about how we specialize in that as an area.
Okay, all right, we'll get to that. But I wanted to make the point that a lot of what we said so far is about how important it is to make sure you've got the right source of capital, because after all, you're giving partial ownership of your baby to another entity. But that's not the only way to raise capital. You don't necessarily have to give away equity. And one example is ClearBank that Michelle founded. There are lots of innovative new ways to raise capital. And why don't you talk about ClearBank for a second?
Yeah, so what I was seeing in the market is that basically today, 40% of venture dollars are going into companies to be spent on customer acquisition costs. Those are typically, Facebook and Google are the largest channels, but that could be anything that's driving that. And what's happened is that's kind of forced companies to become way more diluted than they've ever been before. So the example I like to use is Bill Gates owned 49% of Microsoft when it went public. The founders of Lyft, as everyone just saw, owned 3.5% of Lyft when it went public. And what's driving this is this huge need to be acquiring customers. And so our view is that we could do that for way cheaper than equity, because the equity is wonderful and having partners are wonderful, and we have a ton of great VCs that believe in us. But the problem with equity is you never get it back. After you've given it up, it's almost impossible to do it that way. So what we've done is we've said, look, we'll give founders capital on a rev share. So our typical, deal is like we'll give founders $100,000 to buy digital ads. They give us 5% of their revenue, and till they pay us back $106,000. So it's a 6% flat fee. It's the most founder-friendly structure in the world. There's no covenants, no warrants, no fixed payment timelines. This isn't debt. It's really kind of a new instrument. And once you've paid us back, if you want to take more capital, you can do that. And if you want to go on your merry way, that's totally fine too. And so it's all about providing that optionality to founders, and we can do that all. We have something called the 20-minute term sheet, so we can, show you how much capital we can give you in less than 20 minutes, which is significantly less than the 6 weeks to 2 months it takes for me to raise venture dollars.
Yeah, so not counting all the time you spend on the road finding a venture capitalist. So capital is a service,
Exactly.
as it were. Let's flip the question around and look at it from the investor's point of view. When you're looking at entrepreneurs who are pitching you, what are you looking for? Cheryl, what does it take to get an investment from BlueRun?
So very similar to what Leah said, on the other side, I look for passion, right? So I'm an extremely founder-driven investor. So I think, and it's kind of strange from our perspective, when we see an idea, it's rarely a unique idea. And I don't mean that in like a pejorative way. It's like you suddenly see 5, 10, 20 companies that are very similar to that. So totally. At the end of the day, it is about the founder. And I'm looking for founders who understand why they're raising venture capital right now. So similar to like your point, VC money is there to catalyze something, but it shouldn't be there to catalyze marketing. It should be on the engineering side, on the product development side, on R&D. And so founders who kind of deeply understand the use of funds, and that's actually one of the questions that I always ask even in the first meeting, what is your use of proceeds? And if it isn't in alignment with how you should be using venture as leverage, then it doesn't really make sense, because to your point, you're giving up like 20, 25% of your company in each round. And so if you don't understand what the leverage of that is, then it kind of gets us off to a rocky start. But I think passion for the idea is probably the number one thing that I look for.
All right, thank you. So one of the lessons there is that when you're bringing in money, it should be to build an asset that's going to return.
It's about leverage, right? It's about that it's not just that if I give you $1, I'm looking for $10 back from my investors, of course, but it should be that you're looking for $10 of value that you can actually build the equity of your company by doing that. But if it's more of like a 1-to-1 or 1 to 1.2, then it's not worth it. There's better sources of capital, and founders should go and look for that.
Okay, well, but not to diminish the importance of things like marketing. And Leah, you have a particular interest in that at your group.
Yeah, I'm sorry, I had trouble hearing you.
Oh, it was about marketing and
Yes.
about the specialty that you guys have at your group.
Yeah, so I felt like as I was joining a fund and joining a platform, there are so many venture investors out there, and particularly at the seed stage, it's become very, very crowded. So I really wanted to find a place like Fuel where I felt like we could differentiate and add value and add leverage, to Cheryl's point, in a way that was unique. And so one of the areas that we've really doubled down in is marketing from the very beginning. We found that our early stage companies were looking for help with their brand guidelines, their messaging, their positioning, how to, do that first press release. And these are all things at TaskRabbit that, I not only lived through, but I became really passionate about. And, I was an engineer when I founded that company. I had no idea about marketing. So there's a huge learning curve that I experienced as well as a founder. And so we brought on a full-time chief marketing officer, Jamie Vigiano, who worked with me at TaskRabbit. She's working with our portfolio companies, helping them to really establish those first initial go-to-market plans, who their customers are. And it's just been a nice service that we've been able to add. And consistently, we see that it's just something that those early companies need time and time again.
Good, right, thank you. One of my magazines, Inc., publishes a ranking called the Inc. 5000, which is the fastest growing companies, private companies that we are able to identify in America. So by definition, very successful small businesses. And a remarkable stat from them that's relevant to this panel is that at least 35% of them have turned down venture capital money. Apu, have you ever been in a position where you've turned down money, or just thinking theoretically, when would it be appropriate to turn down an offer from a venture capitalist?
So, look, when your company is doing this, you get a lot of calls for venture capital, and yes, you turn it down because if you can't figure out what to do with the money, like, it's just a terrible idea to take it. I think it can. I think a lot of founders could go like, wow, this is really cool. Like, I've got a bunch of money. I can put out a press release, and I can say I've got another $30 million, and it sounds all great. It's expensive. And frankly, as soon as you sign the term sheet, a gun goes off. And you are expected to spend the money. And if you don't know how to spend the money, you are going to waste the money. And then you are going to get nothing as a founder in the end when you have to exit.
All right.
Yeah.
We have a couple minutes left, so if you wouldn't mind, let's do a lightning round. Sort of in 30 seconds, what is the one cardinal piece of advice you'd want people to take away from this panel about how to find the right VC, or, on the other hand, maybe how to get VC money for sure? Leah, let's start with you.
Well, one thing that was the biggest surprise to me going from entrepreneur into investor is, as an entrepreneur, I always felt like I was so worried about the competition in my own market, in my own category. What I didn't think about was the competition in my investor's portfolio. And now that I manage a portfolio, I realize that my investor's time, as Cheryl said, is the most important thing. And, I was in a portfolio early on with Uber at first round, with Instagram at Baseline, with Lyft at Floodgate, and then there was me running TaskRabbit, right? And so what I didn't realize is that my investors had to decide how to spend their time between TaskRabbit, between Lyft, Uber, Instagram, and others. And so I think just having that perspective as a founder can be an interesting way to think about your competition in the market, not just your category, but maybe what else is in your investor's portfolio and how you can think about leveraging their time in the best way.
All right, so be aware of who else might be competing for your VC's attention. Apu, the 30-second soundbite?
Yeah, I would say one thing I would encourage all founders to do is if you're getting close with a VC, ask for references. Ask them to tell you about specifically a company that has missed its numbers, a company that has gone through some challenging times, and talk to those founders and talk about how the board reacted around the table and how they dealt with that situation. Everything's amazing when everything's going well. It's the easiest thing in the world.
That's really helpful advice. Cheryl?
I would encourage people to take the time to build trust, like a real personal relationship with their investor, especially the early stage investors. On average, we know our founders for about 7 months before we write the first check. And that's frustrating sometimes because you want to do the hot deal or what looks like the hot deal that comes through the door. But really establishing that foundation is important because it's a professional marriage that lasts sometimes 7, 8, 9 years. And oftentimes, like, real marriages don't even last that long. So I think that trust is really important.
Okay, build trust, treat it like a marriage.
Yes.
Michelle, the final word.
So literally, I was going to use exactly the marriage analogy. It's like the marriage with no sex, so you really have to like each other. But I really believe that it's an incredibly long-term relationships. Investors I have seen can be both incredibly helpful, like game-changing, and also incredibly harmful. And so understanding and knowing those same things, and thinking outside of your capital stack, and that there are other options, because you want to be ideally timing yourself where you are raising at the best time, where you know exactly what you need to do with the capital, and you are using it as the best leverage you can have. It's probably my best advice.
All right, so there you have it. Get money at the right time and get it from the right person, someone you don't mind being married to. All right, thanks to our panel. It was really great. Thanks very much.